Hello traders, in this video we're going to be discussing the ICT Judas swing for the London session. And thank you for indulging me, that is my best British accent. ICT himself has said you can use this exact strategy to quit your job in less than 90 days. So if you're unprofitable, if you're not making consistent money, sit back and take some notes. I'm going to give you both a long example and a short example in this video and give you guys some tips at the very end of the video for those of you that stick around. Now, this is a mechanical strategy. This does not require any thinking. This does not require any daily bias. All it requires is for you to be disciplined and execute these exact rules. Now, the very first step to the ICT Judas swing for the London session is to mark the high and low between midnight and 3 a.m. Now, currently, I am on the NASDAQ NQ futures, and this is the 1 minute chart, okay? Now, we have midnight right here, represented by this vertical line, and we have 3 a.m. represented right here, okay? So you want to mark the highest high and the lowest low between midnight to 3 a.m. And so you can see right here at around 1:14 a.m., we put in the highest high between midnight to 3 a.m., and around 1:36 a.m., we put in the lowest low. That's the very first step, okay? Now, next, you want to wait for one of these sides to get swept, and this is also referred to as a liquidity grab. So a liquidity grab, right, that's the second term, is you want to wait for either the highest high for price to trade one tick above the highest high between midnight to 3 a.m. or the lowest low, right? So you can see in this example, at exactly 3:05 a.m., we traded past the highest high between midnight to 3 a.m. I hope that makes sense, all right? So this right hand candle right here starts our liquidity grab. So now that can move us on to the next step, which is wait for a market structure shift. Now, if you don't know what a market structure shift is, this is also referred to as a market structure break, change of character, break of structure. There's a lot of different terminologies about what it is, but it's not so much important that the terminology as being able to identify it on the chart. And so what a market structure shift is so let me back up. The Judas swing is a reversal play. What we're trying to do is either short at the high of the day or long at the low of the day. Because we swept the highs, we are looking for the market to reverse, for market structure to shift to the downside, and then enter as close to the high of the day, shorting from the high of the day, into the inside of the daily range, okay? Now, because we swept and had a liquidity grab right here, we are now looking for a bearish market structure shift. And so a bearish market structure shift is determined by a candle body close below the most recent swing low. So a swing low is right here. This is a swing low, that's a swing low, that's a swing low, that's a swing low. A swing low is a 3-candle pattern where one candle is longer than the candles on either side of it, the candle body wick, right? So we're looking for a swing low to get closed below after our market structure shift, or after our liquidity grab, rather, right? So our liquidity grab happens right here. So we're looking for price to close underneath this swing low and or form another swing low and close under that. So we keep on pushing up right here, right here, right here. And then you see right here at 3:15 a.m., we put in another swing low because this candle is higher and this candle is higher. And this is the lowest candle in this 3-candle pattern, right? So now we're looking for price to close below, have a candle body close underneath this swing low right here. And you can see that at 3:21 a.m., we have a, not liquidity grab, market structure shift. We have a market structure shift with a close below this previous swing low. So there's a market structure shift. Now we can move on to the next step. And now we want to set a limit entry on the most extreme fair value gap in the market structure shift between 3 and 4 a.m., which is our kill zone. So I've thrown a couple of concepts at you, right? So 3 and 4 a.m., this is this gray shaded area between 3 and 4 a.m. This is our kill zone. We need to be entering the trade between 3 and 4 a.m. If you get the setup and you don't get tagged in between 3 and 4 a.m., the setup is invalid. Also, if you don't know what a fair value gap is, a fair value gap is a 3-candle pattern where the low of one candle does not intersect with the high of a third candle, leaving in a gap or inefficiency. All right, so you can see that when we created this market structure shift, when this candle body closed at 321, closed below this previous swing low, we created 2 fair value gaps. We have a fair value gap right here, and we have a fair value gap right there. Let me mark it out for you guys so it's clear. This is our fair value gap. Now, Oh, let me mark out both the fair value gaps. So we have two fair value gaps. I hope that's clear why these are fair value gaps. So we have one fair value gap here and one fair value gap right there. Now, following our rules, we want to enter on the most extreme fair value gap. And what I mean by most extreme fair value gap is the fair value gap closest to the swing high or the deepest fair value gap in the leg of the market structure shift, right? So if it's a swing low, we're looking for the fair value gap closest to the swing low. Because we're shorting, we want the fair value gap, the tallest, the highest fair value gap, closest to the high of the day, right? The most extreme fair value gap. I hope that makes sense, right? So we have a fair value gap right here and a fair value gap right here. This is the most extreme. This is the deeper fair value gap in this leg of the market structure shift, all right? Next, so what are our rules? We want to enter limit. So as soon as, one second. As soon as we have this market structure shift confirmed right here, we would set a limit order on this fair value gap, on this deep fair value gap right there, right? So at 321, when this market structure shift is confirmed and when this fair value gap is confirmed, we would be setting a limit order exactly at 321, and we would be waiting to get tagged in with the limit entry. Now we want our stop loss to cover the swing high or low of the market structure shift. So here's our swing high. We discuss swing highs. Cover the swing high. And then lastly, 1-to-2 risk reward ratio. So, boom. Oh, almost. There it is. So, let me extend this, and there we go. So, let's review everything again. And this would be a winning trade, right? So you would secure 14 points. So I'm going to say 1-to-2 risk reward, 20 points, pips minimum, right? So in this 1-to-2 example, it's only 14 points. ICT says you want to be targeting at least 20 points for a trade, right? So in this case, we'd have a little bit larger risk reward, and we'd have a 2.86 risk reward instead of a 2, right? Because we need at least minimum 20 points to be entering into a trade. If you don't think you can get 20 points, you shouldn't be entering the trade in the first place. Now let's review this trade again, right? So we have midnight, we have 3 a.m., we have the lowest low right here, we have the highest high. As soon as at this candle right here at 3:05 a.m. we trade above the highs, we are now looking for a market structure shift, a bearish market structure shift, because we want to short from the high of the day. At 3:15, we put in a swing low, and at 3:21, we make a bearish market structure shift with also creating a bearish fair value gap that we can enter on. We immediately, at 3:21, we immediately set in a pending limit order on this fair value gap, not this fair value gap, but the deeper fair value gap, covering the swing high, targeting a 1-to-2 risk reward, but with a 20-point minimum take profit. So this would be our trade, and this is 20 points, which is $400 on 1NQ on NASDAQ NQ futures, and you would be in the trade for exactly 29 minutes. 29 minutes to make $400 is not bad, and that's just on one contract, right? So I hope that all makes sense. This is how easy it is. This is how simple it is to quit your job in 90 days if you can just follow this strategy. Now, you can also see, I'll give it an example of what you should not do. Now, you can also see, right, that we want to, at 4:04 a.m., we sweep the lows. We sweep the lows, and we end up putting in a bullish market structure shift. And we also created a fair value gap that ends up getting tagged in, and we push, right? So this long would work as well, right? Let me paint it out for you guys. Now this long would work as well, covering the low, the market structure shift, targeting a 1-to-2 risk reward. Now, the reason why I would not take this, even though this trade works, the reason I would not take this is because we want to be entering in on the deepest fair value gap between 3 to 4 a.m. 3 to 4 a.m. is our kill zone. 3 to 4 a.m. is when London is most volatile, has the most volume, and you're going to be in the trade ideally the least amount of time because there's a lot of money behind your trade, right? So, or when I mean a lot of money, I mean banks and financial institutions, right? They're the ones that move the market. And so even though this trade works, right, the setup works, I would not take it because it's not in our kill zone. Okay, so I hope this all makes sense. And now I'm going to give you guys some tips for those of you that stayed this far. This is it. This is as simple as this strategy gets. People love to complicate trading. This is a mechanical system, right? And here's our fair value gap. Okay. Now, I'm going to give you guys a couple of tips to improve this Judas swing setup. Now, midnight open. So you want to have midnight on your charts, right? So midnight at exactly midnight open when this candle opens, you want to mark that out, right? And if you're taking shorts, you want to be shorting from above midnight. If you're taking longs, you want to be longing from below midnight. So if you're shorting, let's say you're shorting for somewhere down here and midnight is above you, that is not a good trade. You should not be taking that. Same with longs. If you're longing above midnight, you should not be taking that. This is specifically for the Judas swing. Yes, sometimes it might work out, but ideally, this is not the kind of trade you want to be taking, right? Because midnight is kind of our barometer for premium and discount, and you want to be shorting in a premium and longing in a discount. You don't want to be longing in a premium. And so that's midnight. That's kind of our line in the sand. The second tip is the Asia range. This is going to be a double confluence, right? So you see how right here we swept the London highs, right? Between midnight to 3 a.m. We swept these highs and had a market structure shift. Now, you're going to have extra confluence if you can also sweep the Asia range and then have that market structure shift, right? So if we scoop back, Asia range, it can be delineated between 8 a.m. This is 8 a.m. or 8 p.m. to midnight. This is our Asia range. And so you can see right here, when we're shorting up here, we're shorting above the Asia range and we're shorting above the London high and we're shorting above midnight. That makes an A++ trade, right? Also, we have a fair value gap market structure shift inside of our kill zone. That makes an A++ trade, okay? So those are our two tips. I'm also going to, for those of you that have stayed this long, I'm going to give you guys another example. So if we scoop back here, and I'm going to go to this previous day, and we're going to do the same sort of thing. So let me bring the charts back here. And so let's take a look at our rules. Again, we want to mark the high and low between midnight to 3 a.m. So here's midnight. Here's 3 a.m. Here's the highest high at 12:10 a.m. Right? There's the highest high. And here is the lowest low at 2:49 a.m. Right? So that's our first step. Wait for one side to get swept. You can see we had a sweep right here at 3:01 a.m. We bottom ticked the lowest low. Next, we're looking for a market structure shift, right? So in this case, we want a close above a previous swing high. So right here, we sweep the lows and we're looking for a candle body close above this swing high. You see that we just wick it, we can't close above it, so that's not a market structure shift. Now we come down here, we put in this swing high. Look, a swing high is a candle body pattern where the highest high, the wick is higher than the candle on either side of it, right? So there's our swing high, swing low, and then we push up, right? So here is our market structure shift. Market structure shift. I hope that makes sense. You see how we have a candle body close. I think this is candle body close. It's close. But certainly this next candle closes above it, right? One or two of them, right? There is our market structure shift. And here is our fair value gap. This is our deepest fair value gap in the market structure shift. When that happens, we would set a limit order on this fair value gap. We would cover the low, and we would be looking for a 1-to-2 risk reward ratio. And since this is more than 20 points, this is fine. So we'd be waiting, and we get tagged in at 3:40 a.m. and we have a little bit of drawdown, but then eventually we would hit take profit. Now, again, if let's say we have an open trade, we have this limit order set, we're waiting for it, and it taxes in at 4:01, 4:02 a.m., don't take that, right? Or I mean, you can take that, but that would not be following the rules. That would not be disciplined. So this is our fair value gap in the market structure shift. Because this market structure shift only had one fair value gap, you take the only fair value gap in this market structure shift. So I hope this is helpful, right? Mark the high and low between min. Oh, and lastly, if we go up, right, what was our last thing? We did sweep Asia liquidity, right? And we're at the low of the day, and we're below midnight, right? And you can kind of see already that it's almost forming right here at the top, a short at the highs, right? But this would be our setup. And yes, look how much more price move. Cool, it doesn't matter. This is a mechanical strategy, right? So you don't have to think about this. Also doesn't even require a daily bias. You don't have to go on the higher time frame, don't draw on liquidity, all these different things. Now, for those of you that have stayed this far, I'm going to give you guys some answers to some popular questions that I always get asked. How often does this setup occur per week? I would say it happens about 3 to 4 times per week, right? Sometimes you're going to get 2, sometimes you're going to get 5. It's going to happen every day. But in general, you're going to get 2 to 4, I'll say 2 to 4 setups per week, right? Which is more than enough to be profitable for this to be your only strategy, okay? Next, what time frame do you use, right? So like I said, I'm currently on the 1 minute. The same setup works on the 5 minute with the same rules, right? A 5 minute market structure shift with a 5 minute fair value gap, right? You can do this on the 5 minute. You could even do it on the 15 minute, right? But you just want to make sure that you're still entering between 3 and 4 a.m. It just depends on your personal preference as opposed to time frames. Some people prefer a larger time frame. A larger time frame is like a 5 minute market structure shift is going to be a more stronger signal and a 5 minute fair value gap, but you're going to have to wait longer, and usually you're going to have a larger stop loss. Not necessarily, but sometimes you will have a larger stop loss. So with a 1 minute market structure shift, you can get in, be very precise, right? But ultimately, it depends on your preference. So that's the time frame. Time zone on chart. Okay, so on this chart, I am currently on UTC -5. So no matter where you are in the world, right? No matter where you are, you don't even have to be in London. You don't have to be in Europe, Africa, Asia, anywhere. If you have UTC -5, you can follow these rules exactly. Now, depending on if the market is in daylight savings time, sometimes it'll be UTC -4. It'll be UTC -4 or -5. But guys, come on, just Google and you'll be able to figure this out, okay? And then what pairs does this work on? So yes, this works on NASDAQ. Yes, this works on ES, S&P 500. But this also works really well on European correlated pairs like Euro USD or GBP USD, for those of you that are trading Forex. Also, Asia range. If you don't know what Asia range is, you don't need the Asia range to be swept, right, in order to do this Judas swing. But it's always better if the Asia range is swept too, because it means you're longing from the low of the day or shorting from the high of the day after liquidity has already been swept, right? Because this is a reversal play. So, but to answer that question, it's 8 p.m. to midnight if you guys also want to mark out the Asia range. And why do I enter on the most extreme FVG? And the reason why I enter on the most extreme FVG is because, like, let's say we have this FVG. This is our FVG in the market structure shift, but we also have this FVG, right? And you can see at one point, price kind of digs into this FVG and starts pushing away. Yeah, that's great. But let's say you enter off this FVG. Where's your stop loss going to be, right? If you're entering off this FVG, do you put it underneath this? Do you cover the stop loss of the fair value gap? Do you cover this low right here, right? If you're going to enter on the FVG, because the trade is only invalidated once we break these lows, right? Once we break the low or the high of the market structure shift. So if you're entering on a FVG not close to the low or the high of the day, you're going to either have a very big stop loss, or you're just going to take a loss, right? You're going to take a loss that you shouldn't have, because the trade is only invalidated if we breach this low, right? So some people got in on this fair value gap, and unless you got out, right, that's going to take a loss. Whereas, yes, sometimes price won't come back to the deepest fair value gap. Sometimes it'll just come to this fair value gap and keep on running, right? But with this, you can keep a tight stop loss, right? And you can know that your trade is not going to be invalidated because you're covering the low or high of the day. So that's why I always enter on the deepest fair value gap. And that's why you don't need to know about like OTE, breaker blocks, or all these other complicated concepts. And then what do you do if there is no fair value gap? Let's say we had a market structure shift, but it did not create a fair value gap, then you don't take the trade. If there is no displacement creating the market structure shift, right? If there is no gap, then you don't want to take the trade because that means there is no institutional sponsorship on your side, right? That means that there was just a liquidity grab and a market structure shift without a fair value gap is a no trade. And lastly, you guys always want to know the win rate. I get 70 to 80% with this specific strategy, this mechanical strategy, without even looking at the higher time frames. This is a 70 to 80% win rate strategy if you can follow all these rules and be disciplined, right? If you can be disciplined and not switch strategies or say, oh look, we're respecting this fair value gap, I'm going to take this long right here, right? So this is all you need to be profitable. This is all you need to do to quit your job in 90 days. Can you follow these rules? If you can follow these rules, you can be a profitable trader. All right, guys. If you have any questions, post them in the comments below. Please like, please subscribe, share it with your mom, and also join the Discord because we are creating a community of like-minded traders that are traveling the world, living their dreams, and doing these simple setups day in and day out and making money from these markets. All right, hope you guys found this helpful. I'll see you in the next one. Peace.